All right, for regular viewers of the show, we have a basic drill here. I try to follow it actually on my few shows across a couple of networks here, and that is to never buy consensus. It's always dangerous to do so. And also just sort of look at some contrarian points of views. For example, one of the more popular ones, especially with the tax cut, was that it would be very damaging to housing. Now, it still might, but that consensus view seems to get stung every time we get a new number out, that even in anticipation of the tax cut to come, something that would be damaging, presumably, to home ownership, has so far not proven to be the case. We've seen that in U.S. construction spending, which continues to rise, buoyed now by a lot of private money coming in to sort of keep the goose goosed a little bit. The National Association of Home Builders CEO Jerry Howard is here. You might recall that Jerry, when this was first being cooked up in the House, was not keen on what he saw, ultimately liked what came out of the Senate, ultimately supported it, ultimately hopes, maybe with fingers crossed and eyes heavenward, that it works out. But so far, so good, right?
Yeah, so far we're pretty pleased with what we're seeing, but it's very early yet. The bottom line, Neil, is that we think that the rising tide will raise all boats. The strength of the economy, the number of new jobs that are being created in our sector and in all sectors of the economy really will drive housing demand. And we think that that pent-up demand from the recession combined with a strong economy, we think that it'll counterbalance some of the potential negative effects that the tax bill might have had.
All right. Now, I come from one of those high-tax states, New Jersey. And as you know, my new governor, a Democratic governor, and the governors of Connecticut and New York are suing the federal government over this, saying it's going to adversely impact them in an unfair way, and the housing in their state as well. So for those in those states, what do you say? Is it a bifurcated? I hate using that word because I don't even know what it means. But I think it means a different market in the states like that for what's going on in the rest of the country. But do they have a case?
Well, all housing is local. I mean, there's more than 20 markets here in the metropolitan New York area that are absolutely distinct from one another. In some markets, I think in the high-tax states, we expect to see a slight decline in house values, but again, for a short time.
Well, Zillow reports on the high end in those states that's exactly what's happening.
I think that's possible, and I think it'll be short-lived. We believe that the natural economic drivers will take over, and ultimately, people in high-end housing in high-tax states buy those houses because they want to live there, not because there's a tax benefit to doing so. We think ultimately...
But you don't want the value of what you have declining, right?
No one wants it,
the value
right.
of what you have is declining. Isn't the fear going to be that it spreads?
The fear may be that it spreads, but on the other hand, are you going to sell your house at a declined value when you think you had equity put into it?
I see.
It goes to what a lot of the high-end people felt in some of the states that were hardest hit by recession, and they held on to their homes and the equity came back. I think that this hysteria over the tax bill will be short-lived, and I think we're going to have a relatively strong housing market.
All right. Now, we're already seeing individuals who've had the first chance to peek at their paychecks today and more, who will see a little bit more take-home pay. And many have been benefiting from these corporations sharing the wealth with them. You think that offsets whatever those same individuals might lose on housing?
Absolutely, and more than that, I think that the jobs that are being created are going to really push up the demand for first-time home buyers. And first-time home buyers really drive the market. If we have a strong resurgence in middle-class jobs and first-time home buyers, the kids who've been living in their parents' basements during the recession, they come into the marketplace.
Not just in their basements, they could be on the main floor. Yeah. Let me ask you about that, because one real quick thought on this is that the interest rates have been rising. We've got a 10-year now closing at 2.8%. And that's going to continue and offset whatever advantages you get from taxes. What do you think?
Well, we expect the Fed to raise rates probably 3 times this year and 2 times next year. That'll put 30-year fixed rate mortgage at around 5%. That's still historically low. I don't think that you're at a point yet, or we're not going to be in the near term.
But you're not worried about market forces run amok, because another theory goes that because so many notes and treasury bonds are hitting the market, that too is leading to a backup in rates.
No, we're not. We're more concerned about the cost of land and the cost of construction materials, and as the president noted in the State of the Union, shortage of labor. Those are the biggest headwinds we're facing right now.
But you see a good housing year ahead.
We're looking forward to it.